What is going on, guys? I am Chase. Welcome back to Intelligent Money Investing. Today, as you guys can see from the Robinhood web app right here, I'm up $546 today. I put some more money into the market, so we're going to talk about what I'm going to do with that money in just a second. But before we get into that, I want to thank you guys so much for the support on the last video. Absolutely insane the amount of likes, nice comments you guys have been giving me. And just to remind you guys, I do read and respond to almost every comment that I get on here, so and I absolutely love doing it. Puts a smile on my face when I see some comments from you guys, so it'll be great to see. And also, if you guys want to join up on the Discord chat here, it's getting pretty active. We're getting more people in there. The link's down in the description. So try that out, and that'd be awesome to see. Now let's get into the video. So as you guys can see, I'm up $547 on the day today. Over here in the notifications tab, you guys can see I have $500 of funds available because I just transferred that over from my bank due to this pretty big dip that we've been seeing in the market lately. Now we have a little bit of a bounce back today, and I was planning on putting my 500 in, especially if we had a red day today, but we were up in the green, but I still wanted to get in on a pretty decent buying opportunity. So the first thing I did with this new money that I put in is I have a new #1 individual stock position, and that's going to be Goldman Sachs. So I have a couple reasons why I like Goldman Sachs going forward, and #1 is going to be our rising interest rates environments. And basically, what money is getting more expensive to borrow, to lend, so that's going to boost the revenues and the profits for pretty much banks across the board. So that's my #1 reason, and it kind of is a way to counteract. It's like the opposite of what I'm doing with the real estate stocks, because the real estate stocks are borrowing the money from the banks, and Goldman Sachs is one of the banks that's going to be lending out at a higher interest rate. So it's a little bit counteracting that position, kind of hedging my bets on my real estate right now. The #2 is going to be the volatility in the market that I think we're going to see going forward. We've really had like very little volatility in the market. It's kind of been straight up for the past year and multiple years really, but it's starting to get especially volatile right now as the bull run starts to kind of come to a halt a little bit, slows down a little bit. We'll see if it ends up going down over the next couple of years, or if we keep pushing it up. But either way, I think we're going to see some big days of jumps and big days of big sell-offs like we've seen recently. So when that happens, you are able to, like, places like Goldman Sachs are able to actually make money on trades rather than if they're shorting a position or going long in a position. It's a little more unpredictable with the volatility, so they're able to have more opportunity that comes with that volatility, if that makes sense. Now, I want to go through a couple more positions that I may be getting into, and I want your guys' opinions on what I should be getting into, because I got about $250, $260 of buying power right now. And the first one is just going to be add up another VOO share. As you guys know, VOO S&P 500 Vanguard ETF, only a 0.04 expense ratio, so that's incredibly low. As of now, it's about 10% of my portfolio, but you guys know I have SPY as well, a few shares of that. So really, the S&P 500 makes up a large portion of my portfolio, and I really don't mind that. I think that's a very good group of companies, and it's going to be a strong performance over the long run as the American markets even kind of strengthen. So that's going to be my first option. Not too much, like nothing too fancy there. My second option isn't, I don't really have an individual one for it, but I'm thinking about trying out a couple bond funds. People have been kind of suggesting that to me, and I think with the run we've had, even though I am a very young investor and that bonds very much don't get the same returns as stocks and ETFs over the long run, we could see a pretty significant drop if the market kind of turns around and continues on our worries about trade wars and stuff like that. Maybe some trade war stuff actually does happen and that hurts our economy. So that would have a pretty negative impact on stocks. So maybe bonds would be a good one to kind of diversify the portfolio a little bit away from just equities. I'm going to make another video kind of following up about the difference in returns between stocks and bonds over the long run, but this would be more of a short term, and I definitely don't plan to hold bonds in my portfolio over the long run. So next one I'm going to be thinking about is something like a VYM or an SPHD, very much a high dividend yielder ETF. SPHD is my monthly dividend yielding one. My one problem with SPHD is that it has a very high exposure to real estate. As you guys know, real estate has not been performing well. I talk about that a good amount on this channel just because I have a pretty high exposure to it, because it kind of brought me in with its high dividends and everything like that. So While SPHD is performing well today, I am a little bit down on this, a good amount, about $40, but I have been making a lot of that up on dividends and pending dividends that I get every single month from SPHD. So I'm hoping this turns around a little bit. The thing about SPHD, why I would want to get into this with some of my money, is because it is so low right now. 38.50 for SPHD is an absolute bargain, and it's lower than the first time I saw it. So that would be a reason why I want to buy into this. And lastly, I'm thinking about going into more individual stocks, and that's one place I'm open for more suggestions. Maybe ADVV here, as it is really slumping lately off of the news that one of its pipeline drugs is being slowed down. The process of that getting like certified and everything to be put into the market. So that one's been absolutely beat down lately. It went from like $125. I think it's sitting around. It might have been south of 90 now. So it could be a buying opportunity there. And yeah, that's kind of where my mind's at right now. I want to hear what you guys have to think in the comments down below, or maybe in that Discord chat. If you guys do want to sign up for Robinhood, click that link down below, and we will both get a free stock. It's been absolutely awesome. I've seen a few more people trying to join both the Discord and Robinhood. I get notifications for both, so that's been absolutely great. It's a fantastic platform with free trades. It saves investors a ton of money. So I hope you guys have enjoyed this today. I'm going to enjoy looking at this plus 13% in one day, even though I do know that it's not really a truthful 13% gain. More up $56 on the day, which is still a fantastic gain for me on a single day. Now, hope you guys enjoyed this video, and I will see you in the next one. Have a good one.